With thousands of stocks trading, we need to focus. You can't catch every winner, and really your universe of stocks that you're looking at should be focused on your one goal, secular growth. And in order to catch that secular growth, you really need those strong fundamentals and that positive technical action. Now, my main scanning tool is MarketSmith. It's a premium product from Investors Business Daily, and it's really geared towards what we're trying to accomplish here. I mean, again, William O'Neill is the founder of Investors Business Daily, so it stands to reason their tool is ideally suited for what we're looking to do. If that premium product is out of your budget, I recommend you look at finviz.com, finviz.com. They have some other great tools. Also, Investors Business Daily has some less expensive products that maybe doesn't have the full robustness of MarketSmith, but still allows you to do somewhat filtering and scanning between stocks. And what we're going to pay attention to here, even if you can't model every screen that I have, if you don't have MarketSmith or you want to adjust them, what you want to do is you really want to scan for each key variable. So it's going to be very hard to find a stock that will have every criteria. I mean, sometimes maybe you'll have, huge earnings, huge sales, but perhaps the return on equity is a little bit lower, which is another key component they scan by. Or I like to have stocks that are recent IPOs. Maybe it's a stock that's having a turnaround, or it's latched onto a new technology, so it's an older company. So you really want to look at each stock and each variable, and you want to build a mosaic and bring all of them together to find stocks that most likely will represent this secular growth theme, and has a chart that shows that it's early on in its basing structure, it's a base 1 or a base 2, and it's showing strong relative strength. So the process is really, you want to build scans that allow you to find these stocks one step at a time, but it's a manual process. There's no one scan that can do it all. If you put every criteria in, if the stock's missing one variable, it'll be eliminated, and we don't want that. So you're really going to have to take each step to find these stocks. It gets easier with time as you practice, so it's really a matter of just keeping that original goal in mind. One way that I find it helps me to realize which are the better stocks is that the best stocks will show up on multiple scans. So for example, if a stock has fantastic earnings per share growth and fantastic sales growth and good relative strength, well, each of those scans that I build for those specific criteria, this stock will keep popping up. So when I have these lists of 70 or 80 stocks or 100 stocks, it's not always 100 unique stocks that will come up per scan. So if you're going through your scans on a weekend or at the end of month or end of day, and you start seeing that same stock popping up over and over again, that's that nudge from the stock saying that this is probably a higher quality candidate versus some other stocks. And that also brings me back to the point of, you want to have scans that you run monthly, weekly, and daily. Different variables change at different speeds. So there's some fundamental scans that I don't run daily, for example, because fundamentals don't typically change daily. Most change at the quarter reporting dates, which tend to cluster together. But that's something you can check weekly or monthly. Things that change weekly are typically relative strength numbers, which is very important. And daily, you'll be able to capture some stocks moving on very big volume to find some breakaway moves that maybe you hadn't noticed. I always want to begin with a core filter of price and volume. I tend to avoid stocks below $20. That goes back to the original thinking that these big institutions don't want to be buying these low price stocks because number one, low price stocks tend to be lower in quality, and two, it's harder for them to accumulate a lot of shares, which is they have that liquidity problem. And that also ties in with volume. I like to have stocks that trade at least $30 million worth of stock a day. So if it's a $30 stock, you want at least 1 million shares a day. You can relax that. If your scans come up with only 12 stocks, you can go back in and reduce the liquidity requirement a little bit. I tend to start with that on the higher end, and if I'm not finding enough stocks of interest, I'll reduce the volume requirement somewhat. So those are the basic filters I use. We'll go over multiple scans to see what I look at. Most people are really kind of overloaded and confused in this section. Really, I like to build a list where I have some stocks that have the best fundamental criteria possible. And I'll also add some stocks that maybe they're a little bit light on the fundamental aspect, but technically they're really leading the market. They have very strong relative strength. So I put those in because maybe the market's keying in on future information I'm unaware of. So if this is a stock that maybe has mediocre earnings growth or sales growth, but is really booming, I'm going to take the time to figure out what exactly are they doing, and is there some kind of catalyst happening in the marketplace that I'm unaware of. So you're really going to have to manually sort these and filter them as time passes. Stocks don't have to be perfect. I'll have some stocks with great fundamentals, but poor technicals, poor relative strength. The reason I'd have those in there is sometimes the stock's got this great fundamental basis, and it's just correcting because it had a major advance prior, or the market is thinks that it's priced in, and then after it has a surprise earnings quarter, or surprise news, or a surprise guidance, and it gaps up. And if it wasn't in my list just because it was showing poor relative strength, well, I'm going to miss this opportunity to find this stock with blockbuster earnings and sales growth that's gapping up and moving. So I tend to really have a mix of strong relative strength stocks and stocks with great fundamental criteria. The key is to have non-negotiable elements like we spoke about earlier and to stay true to your mission. So what are we looking for when we go through these scans? You want to have that record annual sales or earnings per share. You want to see quarterly sales of at least 25% growth. You want to see quarterly earnings per share growth of at least 25% if it's present. You want a relative strength rating of 85% or more. So that 85 is really a ranking, a percentile. Essentially, Investor's Business Daily takes all of the stocks that are trading on the markets over the past 12 months and rank them in percentile. If you're 99, you have advanced the most over the past 12 months. If you're number 1, you did the worst. So you want to have a relative strength of 85 or more, or if it's a recent IPO, this is why you want to look at these scans from different directions. If it's a recent IPO, you don't want that relative strength number, because if it's only been trading for 3 months, there's not a fair comparison. It may have been pausing after the IPO and it won't have a strong relative strength, but perhaps it has a good AB relative strength. So for example, the market is pausing sideways and this stock is forming a little bit of a higher low. So you want to try and take a look at it technically on the chart rather than just look at the relative strength number. You want to understand what's new, what's driving the stock and its industry. A lot of moves are industry driven, so technology or oil, or there's an overarching theme that's pushing the stock, propelling the stock forward. So what's new to this stock and to its industry? And you want to explore all these different facets. I keep a list overall of about 150 stocks. That's a list that I feel comfortable watching every day. It's a list where I can understand the story or most of the story for each of the stocks and the key drivers. I recommend you keep a list that you can manage, that works for you. You don't want to have only a list of 10 stocks because, for example, if you're off on your criteria, you're going to miss all of your opportunities. You'd want to have at least a list of 40 or 50 names, possibly up to 150 or 200. I think that's a fair range where you have enough options to work with and look for buy signals, not too few that you can't catch any or too many that you're overwhelmed. So it's really a matter of personal preference, but that's the amount of stocks I typically deal with. So let's take a look at some scans just so you can get an idea of the different criteria, amend these, use them just as I use them. Keep in mind the key point, and I'll point out what variables I'm focusing on for each of these scans. So let's take a look. This is the first scan that we're going to look at here. I call 3-month leaders sales driven. So in this case here, we're starting off with that minimum liquidity here of $30 million of average volume traded a day of stock. A current price has to be above $20 a share. What we're looking for is really 3-month leaders, stocks that have really been leading the market in the past 3 months. And this is really what you're going to see with most scans. You start with about the entire universe of close to 9,000 stocks. By the time you're done, you're down to 83. Again, that may seem overwhelming, but you'll notice between scans, a lot of stocks are going to overlap. So it's really not as overwhelming as it first seems. And so the goal here is to find who's been leading the stock in the past 3 months. But I'm not concerned about earnings here. I'm looking for sales stories. So I want to look for stocks that are 15% within their highs, so you're relatively near your 52-week highs. Your 3-month relative strengthening is above 90, so you've really been outperforming the majority of stocks. I tend to have non-Chinese names. I'm someone who prefers companies that don't trade in China. Just for the added risk. I know accounting standards are not as complete, and I've seen just too many stories myself of companies that have been pulled off the market because of accounting scandals. I don't want that extra risk. Also, and so this here is a stock that you're looking for a strong relative strength, but it has at least averaged 20% sales growth per quarter for the last 2 quarters. And so in this case here, we end up with 83 stocks. Here, this is the same 3-month leader screen idea, except I'm looking for stocks that are earnings per share driven. So that, again, this is why you don't want to have all the variables all in one screen, because sometimes, for example, the stocks, maybe here I'm trying to find the leader of the marketplace. Maybe it's a software story, so earnings are not there, but sales are. That's why I run them in parallel with that variable change, one with an earnings focus, one with a sales focus. So you can see here everything else is identical, except that rather than having a sales criteria, I have an average earnings per share growth of the past 2 quarters of 40%. Once I run these scans, if these numbers are not 25% or more, really 40% or more, I won't really touch them, because I want to see stocks really delivering big numbers. However, for the screening process, I'll keep it a little bit looser, because I want to see trends. I want to see, are there certain stocks from certain industries that are keep popping up. So I'll keep it a little bit looser. But once I go through stock by stock, then I'll get a lot more critical and I'll cut out any stocks that are not something I would actually trade. So if a stock, for example, in the prior screen that was sales driven, I had average sales growth in the past 2 quarters of 20%. So if the current quarter is only 10%, I'm not going to trade that stock because it's just too low. I want to see sales growth of at least 40% or more. But I want to see it come up in my scans again. I want to look for themes within industries. I want to understand what's going on in the marketplace. So I keep the scans always a little wider than I would normally use to actually decide which stock to purchase. I can always cut back later. That's the way I like to approach it. This scan here is focused on earnings acceleration. In the fundamental section, we really took some time and looked at stocks that were accelerating their earnings. And you can see here, this whole screen is really based on acceleration. So I'm looking for stocks that have 2 quarters of accelerating sales, the current price above $10. Again, I lowered this criteria a little bit because these other criteria are so restrictive. I want to have 3 quarters of accelerating sales. I want the last quarter to have big earnings growth. I want to have 2 quarters of accelerating sales. There is such a restrictive criteria already that I want to reduce the current price. Just, if the stock comes in as $12, I'm not going to trade it because it's too low. But again, I want to see themes. I want to see what's going on. So I'll always adjust back the non-essential criteria so I can make sure that I get enough stocks that come up on my screen that it's worth running. Same here, I have the 50-day average moving average volume of 300,000 shares a day. If you don't have the average dollar value traded per stock, you can use average volume. And so I'll use 300,000 shares when I'm using that criteria. I tend to alternate between the two. And the relative strength rating greater than 80. So again, I relaxed the relative strength rating a little bit here because the goal of this scan is not to find the relative strength leaders. That's what the past 2 scans were focused on. Here we're trying to find acceleration. So out of 8,700 stocks, you're down to 40. So it's amazing how this really cuts down relatively quickly. High estimates, again, the market is always forward looking. So this is really geared to finding forward estimates that are strong. We want to see average daily volume here. I put 200,000. I relaxed it a little bit more because I really want to see what's growing strongly. I kept the $10 criteria. You can absolutely keep this higher and just totally ignore these stocks that are lower priced. That'd be absolutely fine too. I wouldn't be trading them anyways. I want to see a relative strength above 80. I relax that somewhat because the real focus of this screen is to find current year earnings per share estimates above 25% and next year estimates above 25%. We're really looking for estimates here. And so this very quickly boils down to 72. And I'm sure if you tightened up your price and volume parameters, you'd probably be down to about only 50. Here we're looking at high return on equity. Return on equity is a key component that William O'Neill likes to use in his analysis. It really shows you how efficiently run the company is with the capital on hand. And I found that although it's not one of the key drivers like earnings and sales, those really drive the extensive moves. I just found a lot of the very well-managed companies in the stocks, the companies that are likely to keep performing well, do have a high return on equity. So I always like to look at this scan. If everything else is available for the stock fundamentally, having a strong return on equity is definitely a major plus. I always like to see that. So again, here I relax the sales and earnings criteria to 20 and 15%. I won't be taking a stock with only 16% sales growth, but I just want to be able to find more of these great return on equity stocks. And we're down to 75 stocks. So again, if you tighten up some of this other criteria as you go through and you look for those key non-negotiable variables, you see how very quickly your list becomes a concentrated list. I call this Hundo EPS. Basically, I'm looking for stocks that have at least 100% earnings growth this quarter over last year's quarter. And you want to have some kind of sales growth as well. I never want to see huge earnings per share growth without sales growth. That could maybe some kind of an accounting trick or a short-term plus to earnings, such as sales of buildings or some other impacts to the bottom line that are not sales driven. The goal to find this strong secular growth needs to absolutely be driven by revenue growth. So I always look for that. So here we're looking for 100% growth for the quarter, and the average earnings per share of the past 2 quarters of at least 70%. So you want to see that strength is very strong this quarter, but it's been decently strong for at least 2 quarters, not a one-off. So here we have 98 stocks that come up in this filter. This is Hundo sales. I kind of just reversed it here. I'm looking for stocks with 100% sales growth. You can see, pushing up revenue 100% is harder than earnings, and so you end up with a smaller list of stocks. And these are really the stocks you want to take note of and really dive in and understand. It's really not easy if you're a large company. It's one thing if you're a small small business in your city and you're having a great year or two with a new product developed, but once you're becoming a multi-billion-dollar company, to come in with 100% sales or revenue growth is really one heck of a feat. So you really want to dive into these stocks and see what's going on and understand their business. I call these potential monsters. I like this is if I had to kind of build a filter that covers the majority of what I'm looking for, this is one I like to use. So the IPO date, I like to look at the past 5 years. This is 2016 to 2021. It's cut off here in the screen. I like to look for sales growth of the last quarter above 30%, the current price above 20, and really I want a relative strength above 90 and accumulation distribution. This is a proprietary metric from Investors Business Daily that they use to find a stock being accumulated. I like to have that with an A and B category. You can see out of a huge list of stocks, you're down to only 27. So these are stocks that are young companies with good sales at a higher price, exhibiting strong relative strength. So that's really kind of a good, quick view of some stocks that may have all the potential criteria. Again, here we're looking at recent IPOs, but that are near highs. I relax some of the criteria such as relative strength, etc., because as I mentioned before, that may not always be present. So I really want to focus on these young companies. A young company is really one of the key criteria, the key aspects of some of the biggest winners in history. They tend to be new to the marketplace. So you always want to have a stock with adequate liquidity. And I'm looking for stocks that IPO'd in the past 2 or 3 years. You have average sales of 20%. Your market cap is at least $500 million. And here I'm putting an aspect of trend. A lot of IPOs are either very successful or very unsuccessful. So if it's an IPO that kind of like comes to market and falls right over and is below its 50-day average, I want to just ignore those. So these are stocks that are at least above their 50-day and within 20% of their highs. And again, outside of China. So that's quickly we're down to 39 names. The relative strength, earnings per share, and top groups. This is really a way to look at the stocks in the top performing groups. And the main focus here is really, industry movements, and it's not really company specific. So again, these are proprietary numbers to Investors Business Daily database. You're looking at, the A or B is really a relative strength rating for these top groups. So that really immediately cuts the universe down from 8,700 to 2,900 stocks. And we go through all the other regular criteria: price above 20, average daily volume of 300,000 shares a day or more, $20 million. And we're looking for average sales percentage change for the past 2 quarters of 20%. And you want to find stocks that are sitting 15% from their 52-week highs and have a 3-month relative strength of 95. So these are really stocks that are in the top groups and have the top relative strength in the top groups. And that's, again, this is kind of another momentum relative based scan to help you figure out what trends are really leading the market right now. Whereas before we look for earnings acceleration, this is a scan I built really just to find sales acceleration. So again, this is a lengthy process. Don't become overwhelmed. These are not variables. All these scans don't have to be run the same day. These are not things that change every day or even every week. I mean, sales acceleration, only once a quarter does new information come out. So I really run these weekly or even every couple of weeks. It's just, you want to build your list over time, and the themes are going to become clear to you over time. So here again, we're just breaking it down. I'm just looking for really acceleration throughout all the different metrics. You can take a look at this later with a decent relative strength ranking and price and liquidity ranking. You end up with 47 stocks. You're really just trying to cut all of the stocks of the universe. You have almost 9,000 stocks. You want to try and get down to that 100, 150 stocks, and you really want to cut through all the different variables. So as you can see, there's really a lot of different variables, and there's different ways you can scan the market. I'm going to have additional scans in the documentation that I use on a daily basis. I don't want to overwhelm you here in the video and just run scan after scan. The real point is that each scan should have a focus. It should be a key variable that you're looking on. And then once you have that variable isolated and you see the stocks that come up, you really want to run it through the general logic test of, is this a secular growth story, and is it being recognized by the market? And that's how you build your list. And once your list is built, then you're looking for that relative strength on the price charts and your shaper patterns and all of your tactical patterns. So it's really how you build your universe. And you're going to see with time, especially if you limit yourself to these stocks with these metrics and you can see good forward estimates or understand the forward story, it's going to start to all come into place. And it's really a bit of practice. If you don't have Marcus Smith, don't worry. I understand it's a premium product. FinViz has a lot of great variables you can scan by. And really, you're just trying to find those great secular growth stories. So if you don't have every metric, you can find earnings per share numbers. You can find sales figures online, these different scanning tools. And there aren't that many stocks growing that strongly. So if you limit yourself to stocks that are growing more than 40% sales quarter over quarter, year over year, very quickly you're going to be able to isolate your universe regardless, even if you miss one potential idea because you don't have Marcus Smith. But the goal is to just find some great ideas and really capture them. And with time, your profits are easily going to be able to finance better tools and better systems to further make your trading easier to accomplish day to day and week to week. So next, we're going to dive into position sizing, portfolio management, risk management. You know, your cash is king, you have to protect it. So we're finally wrapping up the entire section of using the different tools to buy, sell, and find your stocks. Now we're going to discuss in the next module, the next section, how to protect your account and how to really position and size yourself optimally for optimal results. So let's dive in.